Hello everyone and welcome to my channel. This is Random Guy on YouTube. Today I will be talking about RCI Hospitality Holdings. RCI Hospitality Holdings is a small cap company with a capitalization of $755 million and trades under the ticker symbol RICK on Nasdaq. For the duration of this video, I will refer to this company as RICK. Through its subsidiaries, RICK operates strip clubs, nightclubs, sports bars, and restaurants. RICK's business can be roughly divided into two segments: gentlemen's clubs and restaurants. RICK owns more than 40 strip clubs in USA and restaurant/sports bar chain Bombshell operating in Texas. The company has experienced management who drives growth by new clubs acquisitions at or under the market price and expansion of the Bombshell franchise. They also opportunistically buy back outstanding shares. The buyback program is currently not running since the free cash flow yield is about 5% right now. Now let's look at the numbers. Fiscal year of 2022 ended for RICK in September. Q1 of 2023 ended in December, and very recently RICK had Q1 earnings call. Revenue came out at nearly 70 million. Now let's look at this chart. For many years revenue grew very consistently, except for the 2020 when the economy was artificially closed. So for the analysis I will disregard this time period. When we fit exponential curve through the quarterly revenue data, we will see nearly 11% growth for more than the last decade. The revenue consists mainly of sales of alcoholic beverages and services, and much smaller portion comes from sales of food and merchandise and other. As I said before, the business consists of two main segments. The majority of the revenue comes from nightclubs, and it keeps growing very strongly despite economic conditions. Only the most recent quarter slowed down a bit, which resulted in the share price diving in the last few days. However, I don't think this is a sign of future slowdown for the business, and the margins are staying strong. The restaurant segment is slowing down significantly and the margins are weakening. But this is much smaller segment with much lower margins already, and the effect on the future earnings of the company should be limited. Over time, in better economic conditions, the margins should return back to the mean. The EPS in Q1 was $1.11. I tried to fit the exponential curve through the earnings, and I am again disregarding the COVID period. Over the years, the income grew by 17% a year. If we look at the growth in the last 2 years, well after the COVID period, it reaches amazing 44% year over year. Real growth in the future will probably be somewhere in between these two numbers. The growth is fueled mainly by acquisition and development of new clubs and restaurants. Because of recent openings in late 2022 which did not show on the recent earnings yet, and the future openings in 2023, the growth for 2023 is in my opinion pretty much secured. Now let's look at the valuation. Today the share price is around $80 and trailing 12 months PE is at 16.6. The forward PE is expected to be around 12, while the leisure and recreation services industry in general has PE around 21.5. Still, the valuation is my biggest concern, since the past average PE for this company is around 15, and in extreme cases it reached around 5. So, either I'm wrong about this investment, or RICK had to be undervalued for years. The total current liabilities are lower than the current assets, so the company is operating without any troubles. However, RICK accumulated significant amount of long-term debt over the years. Currently, the average interest rate on debt is just over 6%, which is not too bad, and the company is paying around $10 million a year for debt amortization. When we compare it to latest yearly net income of 46 million, this is very manageable. The debt to equity ratio is around 0.8, which is relatively high, but comparable to the past, nothing unusual. Now let's recap the investment thesis. RICK has proven long-term growth, and new clubs are being prepared for opening which should secure growth for at least 2023. The earnings growth is much higher than revenue growth. The management runs the company very well. The price to earnings ratio is reasonable, but still a little bit higher than historical average for this company. That is manageable, and I think the nightclub segment is somewhat resistant to recession, since people somehow always find money for alcohol and this sort of thing. Now let's look at the portfolio. The last week was terrible for the markets, especially Nasdaq. My portfolio underperformed, but overall still plus $37 year to date. This is ahead of S&P's $15 and Nasdaq's $32. The next company I am adding to this virtual portfolio is RCI, and we can afford 1.23 shares for the Friday's closing price of $81.52. I will also add 100 virtual dollars to Nasdaq and S&P for reference purposes. Now let me remind you that I am just some random guy on YouTube and not your financial advisor. None of the content of this video is meant to be a financial advice. Full disclosure, I do own RCI Hospitality Holdings in my own real stock portfolio. Now, thank you for watching and see you next week.